Welcome to Illuminati Silver. We tell you the truth about silver. Today is Friday the 9th of April 2021. And we're looking at a question we are often asked recently. Why have silver prices not risen as we are moving now out of recession, back towards global growth, and therefore surely industrial demand should have picked up? So let's take a look. Now, before we try to address this question, just a quick shout out to two videos produced this week. Yesterday, one entitled Gold and Silver Rises, Jobless Claims Disappoint, and on Monday, gold and silver prices dip while UK and European markets are closed. And we've placed links to both of these below. Now, we highlighted in those videos that although gold and silver prices fell on Monday, they staged a slight recovery since then, though looking at today's figures have fallen back a little. Gold is currently standing at $1,745, down $10 today so far, but up $15 compared with last Friday's close, and silver is currently $25.27, down 24 cents today, but still up 28 cents since last Friday. Now, the concern that many of us have, which is why we've been asked, is why haven't silver prices risen of late? Especially as the global economy is picking up, or at least it's being reported as picking up. Well, there are obviously numerous reasons for this. With rising bond yields and strength of US dollar, this having a dampening effect on gold and silver prices. Further, alternative investments, such as equities and to some extent cryptocurrencies, especially Bitcoin, have a substantial substitutional effect. In other words, people are moving into these as opposed to putting their money into gold and silver. You see, gold and silver have risen over the past, shall we say, almost 12 months, mainly because of monetary demand, and particularly on the paper market, but of course we've discovered this in the physical market too, for monetary reasons, as a hedge against dollar devaluation. And we're now seeing some monies coming out of these precious metals as that fear is to some extent abated. And therefore, as the economy picks up, it is natural to assume that industrial demand for silver will rise, which apparently it appears, at least to some extent, to be occurring, but currently not in sufficient quantities so far to make up for the loss in the monetary demand. And what we're going to address today is that perhaps the real reason we haven't seen this huge rise in silver is that perhaps the global economy is not quite as robust as many envisage. And the pickup in industrial demand, therefore, whilst occurring, is not necessarily happening with the speed as originally predicted or hoped for. So to paint a canvas around this theory, let's take a look at two Bloomberg articles, one published yesterday and one earlier today. Bloomberg article dated 9th of April 2021. Headline: Industry suffers in Germany and France as virus forces lockdowns. Germany and France, the euro area's two largest economies, both saw unexpected declines in industrial production in February, suggesting that coronavirus restrictions are increasingly harming parts of the economy that have proved resilient so far. German output dropped 1.6% from the previous month, surprising all but three economists in a Bloomberg survey. Production in France slumped 4.7% and stagnated in Spain. Euro area manufacturing has held up relatively well in recent months as it benefits from economic recoveries in China and elsewhere. A separate release showed German exports rose 0.9% in February. At home, persistently high coronavirus infections have kept large parts of the service sector shut, probably resulting in contractions in output in the first quarter. France's drop in industrial production, the steepest in 10 months, was driven by 11.4% decline in the automotive sector. In Germany, investment goods took a particular hit. Still, the German Economy Ministry expressed some optimism that growth momentum will pick up in the months ahead. The improvement in business confidence and positive trend in orders signal a positive outlook in industry, it said. Nevertheless, the future course of the pandemic poses uncertainties. Chancellor Angela Merkel has signalled she'd be in favour of another short, sharp shutdown lasting 2 to 3 weeks to contain the pandemic. With some regional leaders reluctant to even fully implement the current measures, she has threatened to transfer powers to the federal level to impose additional curbs. Earlier this week, France cut its economic growth forecast for this year to 5% from 6% as a stricter one-month lockdown hurts activity. The government is banking on a strong rebound from the summer to make up for a weak start to the year. I'm convinced that as soon as the health crisis is behind us, hopefully this summer, the French economy will recover quickly and strongly. Finance Minister Bruno Le Maire said on Sud Radio Friday. End of article. Bloomberg article dated April the 8th, 2021. Headline: Lagarde says ambitious, coordinated fiscal aid still crucial. European Central Bank President Christine Lagarde said governments can't afford to let up efforts to support the region's economy through the pandemic-induced crisis. An ambitious and coordinated fiscal stance remains crucial, as a premature withdrawal of fiscal support would risk delaying the recovery and amplifying the longer-term scarring effects, she told a meeting of the International Monetary and Financial Committee on Thursday. She added the ECB's own measures can be recalibrated if required to maintain favourable financing conditions. Policymakers decided at their March 10-11 meeting to ramp up bond buying under their €1.85 trillion, the equivalent to $2.2 trillion, emergency programme, after yields rose. They observed that optimism prevailing among investors seemed not to be shared by businesses and households, which had generally maintained a cautious stance, according to an official account. At the same time, the overall size of the programme was not being called into question. Officials also noted that the economy would rely quite heavily on fiscal support over the next 2 years. Europe has faced criticism that its fiscal efforts have fallen behind, with the International Monetary Fund warning about widening inequality and a divergence between countries' recovery speeds. While the lender upgraded its 2021 growth forecast for the euro area to 4.4% from 4.2%, prospects elsewhere brightening more rapidly. The US economy is set to be turbocharged by a $1.9 trillion economic relief package. At the same time, the euro area's joint recovery fund hasn't even been signed off on in all member states. French Finance Minister Bruno Le Maire said in a Bloomberg interview on Wednesday that he's deeply concerned at the slow implementation of the €750 billion plan. Several ECB officials have argued that national and joint efforts in Europe will provide significant support, even if they are smaller in size than in other parts of the world. These numbers will unlikely match the numbers in the United States, but I do think the efficiency of the spending in Europe is a bit higher, Dutch Governing Council member Klaas Knot said in a CNBC interview on Thursday. At this moment, I do think that the response is appropriate, but if the response needs to be stepped up, then I do think there will be a willingness and preparedness on the side of the fiscal authorities to step up. The ECB's summary of its March meeting highlighted a similar point. Members of the Governing Council stressed that one should not overlook that more fiscal stimulus was in the pipeline, also in euro area countries. It was also considered important that the recovery fund become operational without delay. End of article. So the first article shows us that certainly as far as Europe is concerned, industrial demand generally, or industrial production generally, is far weaker than expected, and especially when compared with the United States and China. We have to remember we live in a global economy, and for silver to really start to benefit from this, we need to see both East and West firing on all cylinders, so to speak. The second article suggests that Christine Lagarde is afraid the economy is not rising quite as anticipated, which is why she's not ruling out further economic support moving forward. The various countries' vaccine programs are moving ahead quickly, and many local economies are beginning to open up. However, we are still seeing rises in COVID-19 in some areas and new variants in others, and those areas are temporarily being closed down. So we're not really expecting to see the spurt in global growth until much later in the year, or at least the green shoots of it. And so we are looking at silver, at least for now, as being in a position to some degree of consolidation, providing buying opportunities for those who feel they do not have enough, and a holding position for those who feel that they do. Now, tomorrow we shall be publishing, as usual, our weekly update, so please do not miss it. Do share your comments below. Let us know what you think, whether you agree with the articles concerned or our conclusion. And finally, before we go, as we've been putting this video together, we've just discovered that 99-year-old His Royal Highness the Duke of Edinburgh, the Queen's husband and consort, has just passed away. So we shall use this opportunity to convey our condolences to Her Majesty and her family at this very sad time. We hope you have found this video interesting and informative, and if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer: Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.